Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation. No.
Right.
So let's use this in the case of a retiree, right? Because again, a lot of restricted stock, as long as you leave the company in good standing and honor the protocol, you're still going to get it and it's still going to follow that respective vesting schedule. But for a retiree, how do we build that into a tax optimization case for them?
So great question. And so it really becomes got to think about it carefully because the price can widely fluctuate. And we don't want to overly rely on RSU payouts at certain prices for cash flow because the vesting date is a drop dead date. If you get a bad month and beforehand, it could change your cash flow plan.
Or a good month.
And the opposite could happen. And oh my gosh, I have more cash than I thought. And so when we think about cash flow, we have to be mindful of, are we over relying on this? Are we under relying? Are we accounting for it from taxes? Because a lot of people, depending on the income bracket, RSUs don't withhold enough. And why I say that is because most firms will hold 22%. For a lot of people, that's enough to cover taxes. But let's say that you're in a case where you're drawing from IRAs, you have a lot of ordinary income, you're pushing into those upper tax brackets. We now got to factor in to tax optimization, where are the taxes going to come from? Where's the cash going to come from to have that liability in the springtime? So all of those things factor in, and it's one of those cash flow sources that has a little bit of uncertainty and really needs to be planned with the advisor and being touch basing, talking to the advisor frequently around that point to understand what is the game plan, has the game plan changed because of what the vesting price was, and so forth.
So you hit a couple things there. I want to pull on those threads a little bit, right? And I think about a retiree. Let's say, for example, the previous podcast was intended for general information purposes only. The information discussed is no substitute for personalized investment advice from Bogart or another investment professional. Different types of investments involve varying degrees of risk, and it should not be assumed that the future performance of any specific investment, strategy, or service will be profitable, suitable, or successful. Bogart is not a law firm or accounting firm, and no portion of its services should be construed as legal or accounting advice. There is no guarantee a client will experience a certain level of results if Bogart is engaged. Our brochure describing services and fees can be found at www.bogartwealth.com.